Welcome, everyone, to this historic episode of the Lion's Den of Leadership podcast, because this is the first time in history others have tried and failed miserably, but we're not going to fail. This is the first time the podcast is being recorded live while being broadcasted to you, our dear listeners, on Facebook. So drop your work, drop everything you're doing. Tune in. This is going to be a good one. Me and my good friend, Airline Pilot, called Steve Rozenberg. Steve, how are you?
Hey, how you doing, Alex? Good to see you, bud.
We just had ourselves some good jokes. Steve drives a good Boeing 787 from here to Sydney and back.
Yeah.
And it takes a lot of work, but
everything can you get caught up in the details, right? The details can get you.
But putting the show on Facebook was a monumental task that he was able to accomplish.
But like finding the right destination, it worked out.
Well, we don't know that because I'm actually, I'm on the other side, so I don't know. But yeah, presumably we're online. And thank you all for joining us. And I know people will join as we go, but this will be published later as it's in its entirety as usual as part of the Lion's Den of Leadership podcast show. So use your favorite device when you're walking your dog, what have you. Now, we have a good show for you today, Steve and I. And by the way, I have to say thank you to Steve's team for putting all that technology package together to actually be able to do this, record this. And I actually have to thank Steve for bringing our guest in. Our guest is Don Ganguly, who is president and founder of a company called Home Union. Now, some of you may not know what that is, but you will get to know Don in a very short few weeks. You'll see, A, he's coming to the PM Growth Summit, and he's one of the sponsors. Thank you, Don. And B, he's got an amazing value proposition, amazing company. 4.5 is going to partner with Investimate. Investimate already works with Steve's company, which is Empire. Don, how are you today?
I'm great. Glad to be here.
That's awesome. So maybe clue us in a little bit, because you and I talked more deeply over the last few weeks about where your company came from, what does it do, and how it sort of became sort of valuable resource for this industry, for our industry, which is single-family property management. Walk us through it.
Yeah. So, so the genesis is, I'm a serial entrepreneur, sort of a vocationally reformed engineer. And we had a company that was called Equinox. It was actually servicing mortgage banks and mortgage servicers to process loans and service loans. And when everything fell apart and people were being kicked out of their houses, we were helping, big servicers keep people in their houses and negotiate those loans. So we must have touched on over $75 billion of servicing. And while we were doing that, we found that there are a lot of these properties all over the country that were going through all kinds of dispositions, where the prices were great and a lot of the outcome was renting them up. So as we looked at this, we said, these properties are out there, but there's no good way for people to find them. A lot of people are on the coasts where the properties are expensive and you're buying mainly for growth. You don't get the rent price ratios that you get in the middle of the country. So it was an aha moment for us. And we said, hey, maybe if we create a product that was like a Zillow for real estate investing, where investors could go in and get all the information they need to invest in a rental property. So you're looking for a different kind of thesis when you buy a rental property than when you buy a home to live in, right? I mean, you're looking at pools and other things and schools. Whereas when you're looking at a rental property, you're really looking at some economic parameters around that neighborhood and that property. And so our thing was, hey, if you went to your wealth advisor and say, Steve or Alex, you said, I got this much money and I want to invest it. And you went to Morgan Stanley or you went to, whoever your wealth advisor was. And, if they said, hey, I got all these tech stocks, I got Apple, I got Cisco, I got Amazon, I got Facebook, I got Google, where do you want to put your money in? Here's a listing of stocks. How do you want to go? And you're like, well, no, that's not what I want. I have some financial preferences. I have a risk preference. So that's not how wealth management works, but that's how real estate works. Because you go to a Zillow or someplace, you get a list of properties and you're trying to figure out okay, which one's a good investment? Let me go find the rental somewhere. Let me talk to a realtor. What does the neighborhood look like? What is that school district? Who's a good property manager? How do I put all this together? And we sort of looked at that and said, that doesn't make sense. What if we provided people the same kind of tools that they have, which they use to go buy assets in the stock market, to buy real estate? So calibrate assets from a risk and reward standpoint, provide rich data around neighborhood and renters and who the good property management companies are, and give them everything from the age of the house to what the appreciation might be, put a ton of big data behind it. And that was really the genesis of Investimate, to say that, we put this out there and investors can find this in one destination, one sort of single stop shop for all their rental property investing needs. And so that's how we got started with the product as Home Union. So that was sort of phase one of that journey. So our first, sort of incarnation of that was that we figured that, okay, these are remote investors and they may be local investors, but what they need is a full embrace. They need a wealth management solution. So we sort of got in the middle of that and said, we are also the asset managers. Here are our partners on the ground who are property managers, but we'll stay in the middle of this. And so we built this great technology platform and then offered these services around it. We did, over $200 million of transactions on the platform, but then we found that we're becoming this giant services company, running around trying to figure out why, a renter was not paying in Charlotte, and we call our Charlotte property manager, to why, some rent was lower in Houston, and it became a crazy national. We were in between us and the property manager and being these asset management guys in the middle. So we started off as a tech company and we were morphing into this other thing, a big services company, and we wanted to be one thing or the other, and it just didn't make sense for us. So last year we made the decision that, look, we don't want to be in the services business. So we took all those properties and connected our investors directly with the property management partners that we were working with in those markets. And we picked, the best ones that already had those properties under management. And we transitioned ourselves to a pure platform play. So Home Union, the company, has a website that has a brand, and investors come in looking for properties, and it is an internal user of the Investimate platform. So when we get leads from there, we have the same campaign management, same investor support organization that then finds those leads and then distributes it to our property management partners on the ground or realtors on the ground that might be, on the Investimate node to actually execute and take those over the finish line. And Investimate, the product, is now being taken out, as you know, to organizations like Steve's and others, so that, property managers who are dealing with investors, and as well as realtors who are dealing with investors, can now have a tool to engage investors to look at, investment properties and buy more rental properties. So I have, and I'll stop here, but I have a very simple analog. So if you are if you're a realtor and you're marketing in a certain patch, wherever it may be, San Antonio, where you live up in the Bay Area, Alex, or where I live down in LA, one thing they need is an IDX fit to the feed to the local MLS. They're not going to be able to sell anything if they don't display properties. So they display properties from their local patch in the MLS, and that's how they engage investors, and they send investors, properties, not investors, home buyers in this case, properties that they like, and the home buyer says, I want to buy this or that, and give them a buy box. So this does for property managers what an IDX feed does for realtors. So if you're a property manager in a particular market, then Investimate connects to that MLS feed in that market in real time and allows, and then we apply a whole set of filters to make sure these are investment grade properties, attach all the rich data. And so when your customer or potential investors come to you, they now have this website, which is sort of a Netflix of investment properties of different categories. You got new construction, you got, multifamily, 1 to 4 units, you've got rented properties, you got all of the above. So, so what we're doing, our goal here is to give property managers a tool to engage with their investors and sell more properties. Most property managers are a little bit lower in the food chain. So the investors already bought the property, and then the property manager puts their hand up and says, hey, I'm the best guy in San Antonio. I'm the best guy in Houston, I'm the best guy here. And they're there with 10 other guys who are also saying they're the best guy, and whoever's got the best marketing, PPC, content that they're pushing out, engagement that they're doing, they're like the ones and saying, I'm the best one. And then you've got your metrics and your performance that speak for you. But you're already after the deal happens. You haven't partnered with this investor higher up in the food chain.
So I got a question.
That's a lot to unpack. That was a lot to unpack, Don. Go ahead, Steve.
Yeah, that is. So one thing I guess my question is when you're dealing with people on multiple levels of different states and different economic climates and everything, and different level of investors, right? You've got some that are brand new, and then you got some very experienced. How do you homogenize the training, the education of the investor, or do you even get into that world to help the property management company educate that client to understand how they build wealth by multiples, or is that just something that you're assuming they already know because they're already in the game?
No, that's actually an excellent question. And what works against this is that you've got all these real estate gurus that are out there saying you can buy 5 properties with no money down, and here's how I made my first $1 million flipping properties and doing all these other stuff, and I had no money starting out. And we know that to buy a good rental property with some good characteristics, you need a certain quantum of capital, you need a certain corpus to be able to do that. So we actually make that very clear up front. So the site itself, if you look at the parameters that we're putting out there, we are first of all telling people, here's the quantum of investment you need for a particular property. So the expenses are upfront and clear. So you need this much for down payment. You might need X amount for rehab. You've got some closing costs. You've got some vacancy costs initially. So have this much money.
You expose data to them. You expect data on what the acquisition would take on this particular property, right?
Yeah. So we lay out, the site lays all that out, right? So it lays out all. So it's not like, okay, I'm going to buy a property, $150,000. I've got 20% down. I only need 30 grand and I'm up and running. That's not the case. So we go in and say, yeah, you need that. Then you need these other expenses, and you should really have this much money if you want to invest in this property. And oh, by the way, after you've invested, unlike the stock market, the problem with real estate that most people get sideways with is when your stock portfolio takes a dive, you feel pain, but you're not writing a check unless you're a short seller. When you have vacancy, you may end up writing a check if you have a loan. Sure. And that's where most people feel a ton of pain and say, why am I writing the check? And then you point out that, look, in the last 3 years, you've earned 12% on this property, and now you're going to have to write this check. But if you don't set that expectation up front, that they have to write a check and there are provisions for maintenance, something will break, something will have to be replaced, the tenant will leave, there's a turnover cost. They're not going to be ready to do this. And you property managers are actually going to bear the brunt of it when it comes up, because that's everyday life in real estate. So what we try to do in Investimate is put all of those expenses in a detailed financial calculation right up front in the financial details. And our investor support groups, when we engage with the investors, one of the things we do is take them through that financial detail place. And we say, here's what the rent is expected to be. Oh, by the way, the final verification of the rent is when your property manager actually goes through that property and does the due diligence. Why? Because 2 homes next to each other may be completely different. It's very heterogeneous. So real estate is, because it's not like a stock. 2 stocks of Apple behave the same way, but not 2 houses in the same neighborhood. So we set that expectation. We take him through all the details of the expenses. We have a price estimate.
So Don, this sounds, sorry to interrupt, but this sounds like this is a classical, interesting discussion of a technologist versus operator, right? Here's what the operator is saying, Steve. Steve says, look, do you enable training and enablement, right, of those investors to go and look at that data? Because I'll be honest with you, Don, I've looked at your stuff. I'm not an avid investor. I'm not a dumb guy by far, right? I can understand things, but I'm not smart when it comes to real estate investing. I just, I have one house. Like, I don't need, I haven't done any more. So to me, the information you are presenting on your website is super valuable, but I need Steve to read it.
Well, I think one of my questions is so, let's say you're in San Francisco, Alex, or Don, you're in LA. and I'm in Houston, right? So someone may look at a property in Houston and say, that's a good deal. And then someone could look at a property in San Francisco and go, that's a better deal. Even though the property in San Francisco may be losing money, maybe it's a negative geared property. So to me, it's a matter of setting the expectation. Yeah, you may lose money every month on the property in San Francisco, but the value of that property, the appreciation is going to make you way more than maybe what cash flow would in a low appreciating area. So going back to my question is, how do you educate someone? Because I've had investors come into my office and they'll say, this property is not making me any money. I'm losing money on my property. And so I'll say, well, why do you say that? Explain that to me. They'll say, well, the rent is $4,700 a month. Let's say it's in downtown area, and my mortgage is $4,900 a month. So I'm losing $200 a month. And my question is, are you really losing money? And they'll say, yeah, $200. I'm losing that spread. You may be losing that spread, but you're in a highly appreciating area. If that property goes up even a percentile or 2% more than it does in the suburbs, and now that property in 10 years is worth $1 million, as opposed to something that goes up 250,000, you may have lost on the cash flow side, but you didn't lose on the appreciation side. And to me, that's the education that I think a lot of people are missing when, again, like Alex, if you were having that conversation, you would say, man, I'd lose my butt doing a property in San Francisco. Well, if you can withstand the negative gearing, you'd be fine. You'd actually come out ahead by being able to do that. And
but
so
I
that's
need Steve. So Don, one second. I just need Steve to tell me this, because look, what happens in San Francisco, and Don, you know this, right? In 12 months, 3 unicorns are going public, like IPOing, right? We have Zillow, we have Lyft and Uber, like all IPOing. So what happened in San Francisco? Everybody's now pulling properties off the market, because guess what? In 12 months, against what the general wisdom right now of this whole universe says, hey, we're in a down cycle, San Francisco is about to make 150 millionaires,
right,
or maybe the number is more. But the point is, like, there's these local events and stuff. So Don, I just want to let you address this. I guess this is just a lot here to address.
No, look, the way we look at this is there are two aspects to investing in real estate. One is data, and the other is boots in the ground. And you guys are the boots on the ground. So you can't invest in real estate without having hyper-local knowledge of somebody that's going to actually do a deep dive and do a proctology exam on that property, right? At the end of the day, if you're going to buy it, somebody's got to look deep down inside. So if you look at the current way, the way to start this, if you look at the current way an investor invests, right? We've got 18 million investment properties, 10 million investors. So people are investing without you, without me. They're doing it today. What do? They figure out something they're going to buy in a particular city. They go to Zillow, they look at some numbers, they look at a neighborhood, then they call their realtor and say, I got $100,000 that gets me into a house of roughly $300,000 to $400,000. I kind of like these neighborhoods because of my, tribal knowledge of the area. What are the rents going for? I go to a couple of different rental sites. It seems like it's between this and this. Can you show me these properties? So he goes, sees the property. He's got a spreadsheet. He then puts it in the spreadsheet, compares them, say, this one makes sense. Let's make an offer on this. This is how real estate is bought today by investors.
Yep.
So let's just take that same process and put it on Investimate and say, what do we do in Investimate? First of all, you can come on Investimate and you can look on any neighborhood, any location. So I can say, I want to look at this zip code or that zip code. You can say, I only want to look at properties that are newer than the year 2000. You put that in. You might be a big guy that's a hack for school districts. And you might say, I only want to look at school districts that are higher than 7. Put that in. Then you might want to say, I only got $100,000. Put that in.
But how do you build the investment thesis? See, Don, for guys like me, for people like there are experienced investors, and they may already have relationship with property managers, but they don't, because property managers don't have the tools like Investimated today. They're not activated or enabled. But how do you put the investment thesis?
So this is all data that's on the site, right? So we're just asking you to input that. So we built, and we didn't discuss this is the technology part, we built a big data platform based on 110 million properties, the entire U.S. housing stock, 20 years of transactions, 200,000 neighborhoods. We have an initiative with UC California here in Riverside where we collect over 9 million pieces of rent. We have crime data from FBI. We have school data. So there's a ton of stuff that goes into our models when we build these models. And what we're trying to do is a risk-reward calibration, right? So the question is, am I going to buy Apple stock at $800 with a certain risk profile? And if I got $4,000, I'm going to buy 5 units of Apple stock, whatever it's doing today. Or am I going to buy something like, else for $70 and I can buy 12 units of that? So what we've done is we've calibrated all the neighborhoods from A through D. And we're not in D neighborhoods in the system. And a C neighborhood is like a C bond. It's a little bit more volatile. It's got a higher return. It's got a lower quantum of investment. And to Steve's point, it's got lower growth. And A neighborhood is a higher quantum of investment, higher growth, and lower return. So if an investor is invested in stocks and bonds, they understand this language. Am I looking at a high interest bond, a high dividend stock? Am I looking at a growth stock? Am I trying to buy Lyft at $70 and hope it's going to go to 200? Or am I buying, AT&T, which is going to give me dividends and not go up too much? People get that. But there's no way to take that lever and apply it to stock, to real estate. And that's what we're giving people. Saying, give me your risk, give me your quantum of investment, give me your location, give me anything else that you think is important to you, and I'll give you a set of properties that match that. So at the core of it, it's a set of properties that match that. And then that same person who is running around and getting all the data can dive into each of these properties as a second step and say, let me analyze the rent. Oh, the rent comps are right here. The rent model is right here. Let me analyze the neighborhood. Everything about the neighborhood is right there. Let me analyze the renters. What the renters make are right there. Oh, so I can see how many people in this neighborhood can actually afford the rent I'm talking about. Is this a growth property, to Steve's point, or is this an income property? If it's an income property, then don't expect a lot of growth. You're going to be in a neighborhood that's a little bit more volatile but high return. If it's a growth property, don't complain to me being upside down on your payment, because that property is growing a lot faster. So if you have money, and Steve, you're making this exact point, if you have money, the appreciation over 5 years is going to take over your cash flow by many, many multiples. But then you have to be in a certain neighborhood with a certain price point, and you have to be able to weather the negative every month. And you may be at a point in your life where you need the cash flow. So that's not a property for you. So all those decisions, we do two things, right? All those decisions are very simple, upfront and center in the product. Then we have an investor support organization, which speaks with these investors to help them use the product and hone their preferences, because we just don't let the product go out because of these questions. It's not like buying a house. There are a few things that people need help with. So we have an investor support call center that says, hey, Mr. Such and Such, Mr. Smith, you came in here looking at it. How can I help you? And we take them through a 15 to 20 minute demo and say, if they're looking for something, then we actually show them how to look for it and get them going. So that's how we answer that question.
Alex, I think an easy kind of to dumb it down, maybe for you and I, it's like Monopoly, right? Buy 4 houses, trade it in for a hotel. I mean, basically that's what you're doing, right? You're buying 4 houses and then you would trade it up for something bigger.
I don't think you can trade on the platform, right?
Conceptually.
Well, you can, the platform has today 120,000 eyeballs on it, right? So if you have a property to sell, there's probably someone at the other end, if that property has a good return profile, then someone would buy that over buying something, then getting it rented. So rented properties actually have the highest velocity in this system. But again, the property has to make sure. So if Steve's selling something, or let's say Empire, one of Empire's customers is selling something. That property goes up on Investimate as a rented property. Steve's been managing it. It's been going really well. It's got a good return. That's going to be a highly desirable property to another investor on the network, because.
And why change property management, right?
Yeah, why change property management? It's like an investment manager, right? This investment manager has been managing this portfolio for a certain return. Now I come and give you that portfolio, Alex, and say, hey, Steve's been managing this for me for 8%. Do you want this portfolio? And you'll buy it all day. Now, obviously, if the return isn't good, that's when the investor has to say, go sell it to a homeowner. But if the return profile is good and the property does well, Investimate is a great place for Steve to actually keep that property management and have another investor buy it. So you can trade, but the caveat is, the property has to fit the trading parameters. It's got to compete with something else out there that, is better or worse than this.
Now, I will say, full disclaimer, Alex, that we actually have had clients do the transaction just like he's talking about with us. So what he's saying actually it does work, because we're seeing it on our side, and we very recently have signed up with you. So I know just from hearing from my realty side is that the model works. Now, I guess my second question on that is, let's talk. I'm curious about the business in the sense of how do you protect something like this from an Amazon or a Zillow from coming in and saying, basically, you've collected a lot of data from a lot of different sources. There's some algorithms, smart people. We have smart people. We're just going to take that business from you. How do you protect something like that is my question.
It's like anything in life, right? It's focus. So Zillow is focused on home buying. We're focused on investing, and you're doing a deep dive on investing. Every transaction we do gives us more information. Every investor that comes into the site gives us more data. We have analytics. We look at who's buying what in what marketplace. The platform very soon is going to have an ability for an investor to put in their preferences. So all the stuff I talked about, you'll be able to put in your preferences. And every time a property similar to that pops up, you'll get an alert and you'll get that property. So those are some non-trivial things to do. I mean, this is not, this took us, almost 2 years to build and cost north of $20 million. So, I mean, there was a fair amount of venture capital that went in to build this thing. So can anybody do it? Yeah. I mean,
yeah. So is your point of difference is that you're going after a different target. Your target is the property management industry, which is kind of virgin territory in this world, because I know that a lot of people, not many people even know. I mean, it's one of those things that I've noticed from my side, and I hear in the chat rooms and the other things, the groups, property managers are great at property managing. They're great operators, but selling is not necessarily their thing. And they have a hard time understanding the selling concept, that if I can get that client to buy another property or 2 properties or 3 properties, my acquisition cost keeps going down because I've already acquired that client. So they want it, but a lot of them just don't have that mindset of marketing to the current clients. And
but
look,
it's also the how, right? It's also the actual marketing and putting together the program.
Yeah, and having the realty division to get you the properties and go through the transaction. So there's a whole litany of things that you have to set up this infrastructure to make happen, which it's kind of in a box, Alex. It's kind of like 4.5, right? You want 4.5, you want someone to market for you. You hire your company, you're kind of done with it. You don't need to learn marketing. Same thing here. I do think that there probably needs to be some micro education to the investors, and kind of like, we were talking earlier, I think it all comes back to the goal of what the client wants, because you and I, Alex, may have different goals. My goal may be to buy 10 of those negative geared. You may only want to buy 1 and the rest positive geared cash flow properties. Just depends on what our goal is and our financial situation and all that stuff. But I do think there needs to be more education at the ground level with the investor and with the trusted source of the property manager. Because to me, and I'm curious, your take is, it's got to come back to that know, like, and trust, right? They're going to trust the property management company to say, you know what, here, let's sit down and have a strategy session to help you buy more properties, as opposed to just say, yeah, go ahead and talk to Investimate, they'll take care of you. I don't know that the conversion rate would be as high that way. Have you noticed any difference with that?
It's a question to me?
Yeah, like for property management companies that educate their clients, as opposed to they have that sit down with them and say, look, let's go over your goals. Let's have a conversation as to what makes sense, what kind of property does match your needs, so that they're kind of zoned in on exactly what they're looking for, as opposed to just saying, yeah, here's Investimate. Go ahead and talk to those guys. They'll be able to take care of you. Like, have you been able to test and measure conversion rate differences?
I mean, there's no question. I mean, this is, as a business, for us, the readiness of the property management company is paramount. That's why, companies like Alex is, I think, are critical, that are raising the awareness within property management companies to say, I need a mechanism to engage investors. I need to be able to find my own leads. I need to be able to have a dialogue with my investors over the long haul. I think what most people miss, and I'm just going to digress for a quick second and come back to your question. When a home buyer is ready to buy, when you and I or Alex are ready to buy a home, you have a time frame. You're ready to do that, right? So all the realtors are like a bunch of, aggressive, salespeople that have to get that person at the point of purchase, right? Because if you don't, the other competitor is going to do it.
Sure.
Bunch of technology that's saying, grab that lead the first 10, 15 seconds after they register because you get the lead. The investor is a very different, animal. The investor doesn't wake up and say, hey, today I'm going to buy 2 rental properties. And if I don't buy it today, boy, it's going to be a bad day. So they are, they'll buy something when they like it. So it's sort of more of a slow burn. They'll say, I'm in the stock market. This seems to be going all over the map. I should diversify into real estate. Let me start looking. And when I find the right thing, I do it. So it's a journey. So if you don't have a way to engage with that investor over the long haul, they're going to buy today, they're going to buy tomorrow. I mean, at Home Union, by the way, we find that people that had registered on the site 3 years ago suddenly put up their hand and buy.
I'm not surprised.
Because the timing is right? Because we've been nurturing them and they've been receiving our email. So going back to your question, Steve, there's got to be an awareness of how to engage with investors. It's not like, gee, I have this great property today, are you going to buy? So you need an ability to interact, engage with investors and speak the investment language. I mean, if you are only going to pitch property management business and that I'm the best guy to fix toilets and keep your renters in place, then you're at a different place in that conversation. They'll come to you after they've done all the heavy lifting on the investment. If you have a sales organization like you guys do, that's what's needed in some fashion. Now, some people don't have it. If they don't, it's a little bit tougher of a road to hoe. And they need a partner realtor of some kind who can take that investor over the haul. What we offer is really an ability to engage that investor, an ability to have a dialogue with that investor, ability to say, hey, you like sci-fi movies? I'm going to give you a bunch of sci-fi options. You like rom-coms? I'm going to give you rom-coms. One day you're going to watch this movie on Netflix. But the point of execution, to your point, is that property manager. And they need to be able to, engage with that investor to go with that last mile and deliver that property and know that this is a long-term engagement. We provide all the tools. We're doing the campaigning. We have the investor support. We do all of that. We're like the Netflix that's sitting on your website, but you've got to do exactly the pieces that you're talking about, or otherwise you're not going to engage that investor. And you got to recognize it's a journey. So 100%.
Let's talk about two things, Don. Steve, sorry, readiness and money. So I think the listeners who are still with us, like they're, if it's later, they're listening and recording, there might be, finishing their dog walk.
It is on iTunes, so you can download it on iTunes. Just
correct. Give us a rating, by the way. Yeah, and then so two questions. Like they're sitting right there and they're like, hey, I want to hear this before I walk home and engage in my life. And what they want to hear is money. How do they get paid for this? And how do I qualify for this? Am I ready for this? So Don, could you address, like, let's start ready. Like which is how does the perfect partnership look for you?
So, the monthly fee is small, but, for us, again, our goal at the end of the day is fully aligned with the property manager, the realtor's goal, which is have that investor buy more investment properties, right? So we all make money when that investor buys more investment properties. So, we have a small monthly fee, but what we want to see in that property manager is the fact that they have an ability to consummate that transaction, because we can't make that horse drink. We can take the horse to water, but you've got to make it drink. And so for us, we're not here to punch a small monthly fee for this product. That does nothing for us. Just basically covers the cost of hosting and other things. We want to see an ability either an ability or a desire within that property management company to say, I want to sell more doors. I don't want to be at the receiving end of getting doors from people who've already bought.
So the value is they get more doors from customers they already have. Get it, 100%. But people can also buy elsewhere, right? That's one. So if you're in Memphis, you're property manager in Memphis, somebody can go Investimate on my website and buy in Houston.
Correct.
Yeah. So this is a really good question that you've asked. So Investimate is in like 16 markets right now. It's in Atlanta, all of Florida, Texas, California, so on and so forth, North Carolina. So one thing we always ask our property management, customers is, look, do you want your client? And by the way, there are two things we get from our property management clients. One is they've got their active clients, who we tag as active clients, and then the campaigns all happen on their behalf, right? So the Empire Industries customers get emails from Empire, from someone at Empire. It's only the Empire brand that's getting in front of them. We are not visible. We're just a product support organization. But the question we ask them is, look, Steve, do you want your customers just to see Houston, or do you want them to see all 16 markets? And if they see all 16 markets, then it's possible that they buy somewhere else if they find the right box. If they see Houston, then it's like tariffs or it's protectionism, right? You're only showing them your products that are built in your domain, and you have. It's likely that you may lose the people who would not buy in Houston, but buy elsewhere, and you're not going to.
So that's the decision you have to make. But do property managers get paid on a transaction?
Yes, they get paid every which way. So if a property manager's customer buys elsewhere, they get a piece of that. They get a piece of the door. We obviously get a little piece of that. If they get a lead from somewhere else, it's the same thing going back from them to the other part of the network. So as the network builds, this traffic builds between the nodes, and the understanding is that you give up something, you get something. So it goes both ways.
And so as I was talking a lot about property management companies, bolting on property management portfolio, like ideally should be just an enabler of, separate business units bolted onto it for to bring this massive value to the customer, right? And the customer wants service, but they want you to take care of a lot of things for them. This enables it. But so my question is, if a property manager does not have any sales division, Don, or they don't have a sales division, they might have some relationship with realtors that don't truly have their own sales division. Is it a product for them?
It's not a product for them if there's not a realtor on the ground that they can work.
That's very fair.
It's not a product for us or them. I mean, because then who's selling that deal in the last mile, right? So you got to have either a realtor in-house or a realtor you're working with who we can train on the system and who would actually do the transactions.
Gotcha. And so the just to sort of wrap up the money piece, Don, and Steve, feel free to get in. We have a few minutes. If there's some unasked questions, go for it. But I want to understand the money piece. The property manager pays you a monthly fee. They get a piece of the transaction, no matter where that transaction happens. They get leads to sell properties to other investors, right? That may get the management on, right? Yeah. And then more importantly, they activate and enable their current customers to buy more without spending any more money on marketing.
Yeah, so there's a second aspect to it, which is monetizing leads they've spent on in the past. And I think Steve's organization did that. So Steve, for example, if I can say this, Steve, sure. You guys are a good marketing organization. You had a ton of legacy leads.
Yep.
That for whatever reason, they're not your customers today, but you've touched them in some way.
40,000.
Yeah, so you put them in the system, and the Investimate system and the email campaigns, a bunch of them are woken up and they're in various stages of saying, I'm interested. So if a property manager can either load its active clients or active clients plus old leads, and we separate the two, we know what's what. So it's a way of putting them out there and see what wakes up. And then obviously they can get stuff outside the system.
Alex, to his point, what it is it makes a point of difference. So basically we are showing how we are different by adding another depth value of what we offer with their services. Because if the other companies don't offer that and we do, it's a huge point of difference to tell our investors, look, if you don't want to buy in Houston, you don't have to. You can buy in any other market. Now, my question is this an international play? Are you planning to branch out into other parts of the world?
Eventually we've been talking to some of the people in Australia because it's a very vibrant, real estate market. About half of the transactions are actually investor transaction, unlike 20% here.
Yeah.
And it's very common for people to own a rental property. The issue for us is, it's work to get the data in and all the other stuff. It's a whole new exercise, but I think for the foreseeable future, we've got a lot of headroom in the U.S. We just got started, and we're seeing, a lot of acceptance right now. So I think we're going to ride that for a little bit.
What's the projected, and I don't know if you can tell us this or not, but the projected city rollout? Do you have one as to where you're going? Do you know what that's going to be in a time frame for other destinations?
So I think if you just look at where we are today, we're in North Carolina, Charlotte, Raleigh. We're in South Carolina, Greenville, all of Florida, all of Texas. We're in Indy, Cleveland. We're in Atlanta, and then we're in California. We are looking really at a couple of different markets. We're looking at Las Vegas as one, only because a lot of the California investors seem to be very interested in a proximity play. I would say Colorado, Denver would be another one. Phoenix would be another one. Those would be some of the early ones, I think, on this side that we would sort of look at next. And then Oklahoma seems to be one that we're working with some PMI franchises that are in Oklahoma, and PMI is sort of rolling this out to some of their franchisees. So we might be driven in that direction from there. But those are sort of the next few that we're looking at. And it's for us. Go ahead.
Is there ever a play where you roll this up with some other services that it's kind of like a bundle package for people? Because, everyone, Alex and I have talked about, there's a lot of these bundle packages, where you've got the property melds and the citizen home solutions, and you got all these different things where it all kind of works together. Is there ever a play like that with other?
Yeah, we're doing this with Don. So we're talking about exactly rolling into the 4.5 services and rolling out to our client population with the key value proposition that 4.5 will put on top, right? As you said, value package. So yes, I'm sure. I don't know about 4.5. You probably have other plays that you're working on, Don.
No, but I think this is the first one, and for everything that I just described, to make that property manager aware and marketing smart is a key component of plugging the solution in there, right? So that's why 4.5 makes a natural partner, because 4.5 is trying to make that property manager more successful from a marketing engagement standpoint. And this is one tool that allows them to do that. And for us, that's valuable is because if they become aware and do all those other things, then this fits in. If we show up and they have nothing going on, the burden's a little bit more on us, because then we've got to get that realtor trained and a few other things going on. It can be done, but it's much easier with a partner like 4.5.
Right, because we walk in, we leave with education. We know which clients have real estate, arms. We know who are more ambitious. We know, and then we can roll out to them, and they'll raise their hand. In fact, once we roll this out, and look, getting more customers, more properties from the customers you already have has been what everybody else wants, but nobody seems to have real solution for your customer marketing. Steve, what do you guys do? Like, I'm just curious, Steve, like, what do you do to market to your own clients right now?
Well, it's funny you say that. We use Investimate now, but up until this, it's a message problem. So I'll give you an example. Pete and I have had the discussion where last year we brought on 450 doors, right? Organically. We didn't buy any. These are all brought in. But we didn't close 450 new clients on new properties. So when we would talk to the investors and we'd say, we can help you make future acquisitions, the first thing they would say is, oh, I didn't know you guys did that. To me, that's a messaging problem. So we have a marketing problem to let them know. They knew enough to find us after, so they knew enough to find us on step 2, but they didn't know enough to find us on step 1, and let alone other investors that would purchase more properties. Because the reality is investors don't get into real estate to buy one property. They know that's not the road to wealth. It only works in multiples, right? So you've already established the know, like, and trust with the client. Life happens. They get busy. Yeah, one day I'd like to buy another property. But if there was a conduit where you called them up and said, hey, would you like to increase your net worth, double it without even lifting a finger? We can help you with everything. Who wouldn't want to do that? Because they got into this industry, they got into this sandbox to get wealthy. And they know it's not going to happen with one. If you polled all of your clients out, Alex, and said, how many of your clients think that they're going to get wealthy with one property? None would. But
you know,
the average investor has 1.6 properties that are managed by property management companies.
Can I say something?
Yeah.
I think you guys froze here a little bit. Can you hear
we
me?
can see you fine.
Just our faces.
Yep. Just mesmerized.
Yeah, we shocked him with our value.
This is good.
Yeah.
Maybe Don is froze up. We'll give him a second.
Yeah.
But I think we need to do sort of a wrap on this one. I think what I want to say is, for those who are listening, and Don, we'll have you on in just a second. The PM Growth Summit is next week. If you didn't buy a ticket, everybody who's anybody going to be there. And just go look, pmgrowthsummit.com, click sponsors, see who is showing up. They're companies you've never heard of, because this industry is hot, it's interesting, it's exciting. You don't want to sit on the sidelines and watch Facebook updates with people who are there learning, networking, connecting. You want to make friends with Steve. All you got to do is come up to him and say hi. He's a friendly guy. You know what I mean? You can do all those things. PM Growth Summit is the way to go. We still have, I think, 8 tickets left. It's a shame that we have 8.
It's going to be a good event. It is going to be a good one. I'm excited about it. There's going to be there's some good players, some good speakers. It's in Austin. It's going to be fun. It's going to be a good time.
PMGrowthSummit.com. Go get yourself a ticket. Don, what were you going to say?
I was going to say something before I got frozen out here. The point you just made on multiple properties, if you look at the system, you'll see there's a portfolio builder. And somebody asked us during a demo yesterday, saying, why do you guys have a portfolio builder? And we said, because real estate is built in portfolios. You don't just buy one. And so the entire system has an ability to search for one or build a portfolio. Now, I'll tie something back that you also said, Steve, which is, I can buy a property for yield, or I can buy a property for growth, right? Appreciation. Once I have them tagged and I have the risk levels tagged, you may have bought one property for yield, and now you want to buy a second one, and you can start having a discussion saying, hey, you already got a yield property. Maybe the second one should be an appreciation property. Maybe the third one, something else. So when you look at your overall portfolio, you may be upside down on a couple of them, but a couple of other ones are actually making more money, and overall you're okay. The system allows you to build it in that fashion. So that's one of the things. I mean, we've catered to exactly that sentiment, saying, hey, don't come search for one property and get one property and go out of here. Think of building a portfolio. You might just buy the first one today, but how are you going to think about buying the second and the third and the fourth one? So the same way as you build your stock portfolio, right? You don't only buy risky stocks. You buy something in the middle, you buy something at the top. It's the same exact thesis.
And Alex, I'll tell you, when I talk to investors and we have this conversation, I'll do like a one-on-one strategy with them. And I'll tell them, the biggest disadvantage we all have is that we live in a house, and we equate living in a house to our investment property, and they're completely different. You're running a business, and that's a rental property business. That is not the same as the house you live in. If you own, and I tell them this, I say, look, you need to assess your portfolio just like you would assess your stock portfolio. If your stock portfolio is not giving you the return and it's going down and down and down, at some point you're so unemotionally attached to it, you're going to cut the rope, and you're probably going to sell it. You're going to take a loss, but you're going to go, yeah, that's stocks, I sold it. I go, but when it comes to having a house that's losing money and it's not giving you the return based on your goals, you'll stay in it and you'll just drag through the mud because you think that's what you're supposed to do. But if you can detach yourself and look at it like an investment vehicle to get you to the goal and just say, I want X return. And I said, if you sit down, like when they sit down with me and say, okay, what return based on your goals were you wanting? And they said, well, I was hoping to get, 15% return. Okay, what's it giving you? Well, on average, last 3 years, it's giving me 12. Okay, well, is there anything we can do to get it up? Maybe make the paint the outside. Some things we can do. If the answer is no, then either we change the expected return or you sell it. And so I think, Alex, going back to, the portfolio, like he was talking about, that is something that I think if you could educate the clients on to say, listen, you are running a business. Just because you live in a house, it's not the same as owning the rental business. And that's a huge disconnect that people, they really don't know how to put those two together because they think they're the same.
Agreed.
True.
Well, let's wrap on this note. Look, this was a fantastic interview, Don. Thank you for spilling all the wisdom. The product is great. I think you're going to do really, really well in this industry. I see zero reason for somebody who would qualify for this partnership not do it. I think it's a double down. I think it's a differentiator. I think it's a way of a future. I think this is how you service your clients and defend your small business against everybody else out there, all the competitors. So wonderful to have you on, Steve. Great to co-host with you, brother.
Yeah, absolutely. Don, thanks for being on today. Appreciate it. And like, if anybody wants to talk to me or Pete, probably Pete is the better one, about how we're implementing and using, your model, we'd be happy to let them pick our brains and why we did it, how we did it. Cause look, I'm not getting anything for us, but I can tell you it works. I can tell you the model works. The product's great. And it's filling a void in an industry that very much needs it, I think. And that to me is the most important thing.
And Don, how do people find you? What's your website address? Is it?
So it's investimateroi.com is the best way to find it.
We'll put in the show notes. We'll link it out. All right, guys, go check it out. Have a wonderful day.
Also, if you want to, we have our download. If you want to go to iTunes, Lion's Den of Leadership. We also have our Facebook group, Entrepreneur Sphere of Influence. So you can go there. We have like-minded people. But again, it's all about sharing it. That, Alex and I take our time free to do this, to educate. We bring people on. We've got a lot of heavy hitters. We've got more coming. We got a pretty deep lineup, Alex, coming of some serious players. So it'll be good coming up.
Pass some of my love to your team, man. They're doing fantastic work.
Thanks, man.
Take it easy, guys.
We'll see you guys. Bye-bye.